Hi everyone, welcome to the first Wallester webinar. I'm Angelina, marketing manager at Wallester, and I'll be your moderator for tonight. For those of you who are not familiar with Wallester, we are a licensed payment institution and a Visa principal member. So what we do with our solution, we have a turnkey infrastructure built in-house, which allows you to scale and launch branded cards, and we can help out with everything from licensing to compliance and card issuance. Let me introduce our participants for tonight. Let's start with our host, Edouard, who is our head of business development at Wallester. He talks all the time to fintech solutions and non-fintech solution marketplaces, gift card providers, and he's helping them out to understand what is the business use case and how to scale it up. From real world perspective, we also have David from GF Money, who is one of our clients for white label solution, and he will add more perspective on how the real launches are done, what are the tips and tricks, and some advices he could share. And of course, we have our third speaker, who is Linus from Visa, for the network-wide perspective, and he will add more to the conversation with all the insights about what kind of programs are succeeding in Europe and what kind of trends we can foresee in the future. So let's start first with a small poll so that we can understand what kind of bunch of people we have today. You can see it on your screen. So the idea is for you to vote where you are currently in the journey, so we can adjust the context a bit. Let's give it 10, 15 seconds. Mm-hmm. So we can see that people mostly exploring. That's perfect. So we can make sure that the information you're going to see today is going to be valuable for you. Yes, 40% of people are exploring. Then you're in perfect place. Edouard, first question to you. So why are so many companies, fintechs and non-fintechs, are looking at card issuing these days?
I think that they start looking at it because now they feel that they can do it actually. When you look in the past, it feels like very complex in order to launch a co-branded card program. And I think that now, at least in Europe, we have defined we have that regulations like PSD1, PSD2 that was launched like a few years ago already. But I think that it created some kind of, a framework that was a positive context for companies like Wallester, and our competitors and peers to emerge, and to be able to propose solutions that is much more simple for any companies that are not, based in the payment industry, and for who payments can seem at the time like very complex. It could take like several months, even years, to launch a card program. And in terms of this investment, it was quite huge. So I think that this framework, has been a very positive signal for the European market. So it helps companies to emerge. And obviously, the technology as well has, increased and improved a lot. So now the platform, they are like natively cloud-based. Everything is about API-centric. So I guess that when you put together like the positive framework plus the evolution of the technology, it makes that everything looks much more simple for the companies that are thinking to launch card payment and to embed that into their existing solutions. And so basically we remove all those barriers that could be a little bit, I would say, scary from an enterprise perspective and company perspective. And now the leaders and the founders of companies, when they think about onboarding card payment, they don't think about this huge project that could take a lot of effort, a lot of workload. They just see like a project that can take like 3 to 4 months and that you can launch with an affordable pricing. So when you put all of that together, I think that this is the reason why most of the companies now are not scared anymore. And when they have their overall, project portfolio, they are super happy to embed card payment into those portfolio projects, to prioritize it and to launch it because they feel that they are capable to do that. So I think that's one of the reasons why they do that. And I would say that the other reason is that card remains the major means of payment in Europe. It's still growing from years to years, like from 2024, 2025, 2026. And it still remains, this card, it's a daily contact that you have with your client. So if you are able, to embed this daily contact and card payment into your ecosystem, it opens a lot of doors to generate like new revenues, create new use cases. And I think that's one of the reasons why they want to launch card programs so far.
And what kind of metrics are they trying to move?
Well, I would say it could depend about the type of industry that you have in vertical. So, the beauty of embedded card payment is that you can address a lot of industries and a lot of verticals. But I believe that there are three main things that companies try to achieve when they come to companies like us, Wallester. I think the first thing is to try to add, some additional, benefit around their core offer. So, to create some added value about what they are proposing so that they, you can create some kind of stickiness about your clients. So you start with one product, then you start to add embedded card payment, and you can create, that funnel throughout the customer journey and onboarding solutions where you can, add value, and out of this value, you can generate additional revenues. So I think that that's something like that they try to do to create stickiness and to keep their clients into their ecosystem. Obviously, the other thing is to generate revenues. So, card payment is something that you can generate revenue out. So you have like interchange that you can get. You have a forex transaction as well that you can add on it, and you can also have like some subscription model that you can propose to your clients. So I think that it's a very good leverage for companies to generate additional revenues out of what they do. And the last thing that comes to my end is maybe the data. The more data you have about your clients, especially data that are related to payment itself. So it helps you to understand what are the habits of your clients. You understand them better. And then you can also use that either to propose some additional, services. So it can be loyalty, program that you build out of the cards that you have been embedded. But it can also be, data that you can use for operational aspect. If you can take some example like, I don't know, expense management services solutions, you have the workflow, to validate the receipt, to validate an expense. If you are able to add the card transaction within that, and that you can connect it as well to ERP accounting systems, then you remove a lot of frictions about operational aspect and operational tasks that are done, by finance, for instance. So yeah, I guess that's the last thing that they want to try to do, to have more data to understand better their clients and optimize the processes that they have on a day-to-day basis. I guess it will echoes with you, David, about what you were trying to do with GF Money.
Yeah, it would be great if you could give us some context about what GF Money does and how you arrived at the decision to have cards.
Yeah, so GF Money Group, we are a Nordic consumer credit institute. So our base is that we grant credits to consumers, and we operate in Sweden, Denmark, and Finland. And in the beginning, we were offering a credit line to our customers. But we saw the need to be able to give customers something more than just a credit line. We wanted to build some more value for the customer. So in 2021 in Finland, we launched our first card program test. And then we joined team with Wallester to expand the card program as also to our other countries. And one of these reasons is just to get a more consumer perspective on our product. So a little bit centric to the customer. So it will be more tailored to their experience, to what they want to do. And of course, it opens up a lot of opportunities for us and for the customer. For example, to build what was talking about loyalty as an example. Being loyal to a certain brand, the brand can be us as a brand. It can also be a merchant. It opens up portals to a big world of merchants. For example, creating a specific loyalty program with one type of merchant to use that as a marketing channel for that merchant, but also be able to capitalize on a deal with a merchant. That is one key direction for us to move to cards from credit line. Simply opens up a lot of more doors.
And how did you approach it from technical point of view? Was scalability important for you to go into new markets?
Since we are in different markets, so API solutions is very important to us, and that we have the same API solution for all of our countries, which means that we could scale different solutions. Say that we invent some good cashback solution for Finland, for example. And we want to be able to passport that solution over to Sweden and Denmark as fast as possible. And if you have a unified API solution or tech stack, for example, then it's much easier and faster to go into changing the markets or coming up with new solutions for your core programs. So that is something very important to us, at least.
Yeah. If I may, on that one, so I fully agree with you, like having this, single API for all the markets you want to launch. And the feedback we have as well from, partners or prospect we're discussing is, so we have the luck to have like Europe as a, common market and everything. And when we discuss with our partners, there's always something that they have in mind. So they used to start, with one market, but they always project themselves like to expand as well into different countries. And when they do the decisions or where they try to pick up, the providers, they always try to think, 3, 4, 5, 6 years to make sure that they won't be blocked if they want to, open in a new market where you have some other currencies as well. And so we feel that as well all the time on the field, and that's one of the feedback that we feel to think like, medium long term, not to be stuck in the past when you expand as well.
Yeah, and then as a modern consumer lending business, we also, of course, want to go to market quickly. This, of course, helps. And for example, GF Money, we chose to do virtual cards because we also want to give access to the consumer to start using payment solutions as fast as possible. So essentially from application process until completion in 5 minutes, they will have access to the card and can start using it for consumption or whatever they want to use the card for.
That's impressive.
One good thing for us is also that when the customer actually starts using the card, we get data on the customer. We can see behavior for different customer clusters. That opens up the world of merchants, as I said before, where we can essentially tailor our customers' experience to the merchants they usually interact with. We can tailor cashback deals for those type of customers. You can market segment the base, and also one important thing for us is you can have a risk control.
Mm-hmm.
You can see which customer group might be risky based on the purchase behavior. And I think some of these parts are a little bit forgotten when we talk about card programs, because at least from a compliance perspective, it's much valuable information.
And I think that what you mentioned about virtual card that's something we see as well, like expanding a lot within Wallester. We have more and more, partners that decide to go for virtual card, and I believe that it opens like doors to a lot of new, use cases for different, industries as well. So here we're talking about GF Money, obviously credit providers, but if we extend a little bit, like if you go to travel, you can automate a lot of things, when you work with OTA, booking and references are on travel. If you talk about logistic as well, there is something that you can add. And those virtual cards, like the fact to have them like issued in just few seconds, and to have the payment like can be done in few seconds as well. That's also something that helped a lot card embedded payments to develop and to expand. And I would say that it's not every day, but there are new use cases every day, and that's what it's super exciting with card, because you can automate stuff and do things like that.
And one positive advantage, at least in the Nordics, where we are almost cash free, is that this card could be used almost everywhere. And we see that people will bring their phones; they won't bring the wallets in the future.
Yeah, definitely. And you avoid all these delays that you can. I mean, from a customer experience, this is just like amazing, I would say, just to have a card in a few seconds and to use it straight away, instead of waiting for the cards to be delivered. Still, physical cards are still there, I believe, but from a customer experience, just to be the onboarding and to have the card straight away, I think it's great for a company to provide that, because it brings like innovative image and stuff like that.
And I think if I may jump in there, I mean that's a trend we've seen over the last few years, that you more and more of this card issuing becomes digital first, and of course, I mean the first use case we had around tokenized payments was Apple Pay a few years back, but the whole drive towards embedded payments is of course underpinned by the same technology. You tokenize the card credentials and put it into something which enables the seamless and smooth and secure payments, and working with someone that can do that basically from day one is a huge benefit for any company that moves into any types of payment. You basically have access to the whole world directly from the start.
Yeah, and that's something we discuss often as well. Like, so you mentioned Apple Pay and you have Google Pay. So I don't know if I can name all of those. Let's say all the others, Samsung, PaySmall, those kind. But I guess that it's yes, it's very important from day one when you launch your card project to be compatible with all those wallets and all those mobile phone manufacturer, so that you can touch maximum of clients, and instead of just going each and every one like to connect and to do this kind of stuff. So I guess that is a great value as well to have that.
David, having launched the card program and having been through it in multiple territories, what would you say were the biggest lessons learned for people who are considering this?
Well, I'm a product person, so I like to create products. I like to develop product funnels. That is my thing. But if I were to start this all over again, I would actually start on the technical side first. Start mapping out all of the opportunities for what you can do with the card. Finding out what is opportunities for business expansion, what kind of support is it for different kind of bonus schemes, and so on. And after that, build a product upon all of the knowledge base you'll gather from the technical perspective. And of course, when you have the technical perspective, instead of focusing on one market, you can then start focusing on multiple markets and maybe have a launch in multiple markets at the same time, as an example. Because then it's more about localized market changes for the product, instead of making a product for specific countries. Then it would be, I would say, much faster to launch the actual program. And then you can also see that the difference between the localized rules and so on. The good thing with card payments is that most of the jurisdictions have very similar laws, and so you could essentially launch in multiple countries at the same time with minimal differences to the actual card program. Of course, as a credit provider, there will be different rules based for credit, but for the payments part, will most likely be very similar in all of the different jurisdictions you want to enter. So that is, and of course, what everyone else loves who's in tech: test, and test. Test a lot of weird user cases.
Your users will always teach you. Thank you very much. That's very valuable insight. Going through a bigger perspective, Linus, question to you. What kind of expectations are you seeing from the companies right now who are considering card issuing?
Yeah, so I think, I mean, taking a step back. So when you are a small business, and if you start up a new business somewhere, I mean, the fundamental part of that is being able to receive payments and do payments. And in many cases, businesses that are starting up, of course, have ambitions to not only operate in one country, but actually, as David just said, being able to scale into several markets and to do that quite quickly. And I think card payments is probably the only means that allows you to do that really quickly if you work with the right partners. I think the expectations is, I think there are two camps in this one. One part is that thinks that everything is super easy and we can do it on our own very quickly, and we will build it and we will be live soon. And then on the other side, it's the ones that thinks that becoming or starting to issue cards is super complicated. You need to be a big bank, and you need to have millions of customers and all that. But I think the truth is somewhere in between. And if you decide to work with a partner that is already connected to the payment schemes and have the possibility of issuing the cards, the truth is that you can be ready and live very quickly. And you can do it with quite minimum effort. And I think what you need to think about, though, is to not only throw out the card in the market without thinking about what is going to be used. You mentioned data and making use of the knowledge that you get from the card transactions. That's super important. But it's also important about what value do you put into the proposition that you're offering to the customers? How do you make them use it? How do you make them to actually think of that as the primary way of paying? Because there's nothing worse than to launch a card program and issue lots of cards that are never used. So it's actually super important to make sure that they are being used as well. And I think, as we see also, I mean, the world is moving against these things are becoming more and more personalized. It has to be mobile first. It has to be prepared for AI and agentic commerce in the future and everything. And I think if you are a startup and you start from scratch and you're setting this up, there is a lot of different things to think about. So I think selecting the right partners and working that through is very important. And even us as Visa, we have come a long way. If we look back 10, 15 years in time, then we built everything in-house. And we developed solutions that we then tried to take to market. And at that point, basically all our customers were large banks, and we brought ready solutions to large banks that we hope that they will start to be using. But with the technology we see now, and with the speed of things happening and how quick things are adopted in the market, we also realize that we can't do everything on our own. So hence we partner up with the best partners and team up to basically bring the solutions to market through partners instead of doing it on our own. I think I'll pause there. I can talk forever, but I think I'll pause there.
That's great.
I have a question, Linus. So,
go for it.
Do you think it's when creating a card program? Do you think it's important to organize what kind of customers usage you want to expand? Do you want, for example, to define it as a travel card, or do you see it's one big step in creating the program to actually map out what do you want users to use the card for?
Yes, so I think, I mean, yes, to a big degree, of course, you need to know the segment of the customers that you want to have and how you want them to use the cards. But on the other hand, I mean, cards are general payment means. You can use them anywhere. So I think quite often you see players that have a certain niche that they go after. It could be supporting freelancers or taking care of digital advertising. But then when you get the card credentials out, you can also start using that for more and more parts of the spend. And I think you, Edouard, you mentioned this as well. So if you send out invoices and you enable them to be paid with cards, that's an additional use case that you can get from having the credentials out in the market and the company starting to use them. But I think it's important to understand where you want to go. I think this trying to launch a product with a one-size-fits-all ambition is very difficult. You need to know what you're going after, and you need to target the audience that you want to start using the cards, to basically onboard from the beginning. But then you can start the usage and grow the usage out from that.
Thank you. And you mentioned that you have to be thoughtful about concrete use cases. Are there any other considerations that companies should be thinking about to optimize themselves for success?
Yeah, so I think this, I touched upon it a bit, that you have to have this, personalized experiences. And we see also for small businesses. So a lot of the innovation we have seen over the last 5-10 years has been in the consumer space. So the consumers are now paying everything with mobile. They have all the cool app and all the cool offers that they get. That's already built now on the consumer side. And now we see that behavior being transferred over to the business side as well. So if you are, as a person, are using all the smoothest payment solutions as a consumer, you want to do the same when you're acting on behalf of your business. So we call this like consumerization of business payments as well. So it's very important that you kind of follow the trends that are happening in the market and provide the same smooth solutions both to businesses and to consumers. I think also adding different types of values. So for example, real-time access to credit, we spoke about that before as well. That's very valuable to customers, to adding additional things and removing some of the financial bottlenecks that the new companies might have. So sometimes it's if you need the funds and you need to go to your bank and apply for a loan and wait for a long time to get the credit decision, and then you need to wait for the money to be paid out, and then you can start acting again. For a small business, I think time is money. You need to act really fast and you need to move really fast. And I think real-time access to credit combined with card payments actually facilitates that really nice. And then of course, I think this that you're seeing also that even small companies today are international to a large degree. Yes, there are some segments are mainly acting on the domestic market, but many small companies also work cross-border.
Yeah, that's true. Looking into a few years back, let's see that you have a crystal ball. Where do you think the industry is going in 2 years' time?
Yeah, it's exciting. I think, all the time I've been working with payments. So basically, since my first job was actually in payments. I've been working with payments my whole time, and I've always said that now is the most exciting time to work in payments, and I still say that because there's happening so much. So if I would guess what is going to happen, and it's not a super bold guess, but I think payments will become even more embedded than what they are today. So basically, where the customers are shopping and where the customers are taking the decisions, that is where the payments need to be available. And I think also the trends that we see now with AI and agentic commerce, that is going to drive a big shift also in how the card payments or payments in general are integrated into the different shopping sites that customers are using. And I think this also, it's not like these things are not living their own life. Before you had your payment cards, and then you had your internet bank, and you had a service to pay your invoices, and you had your bookkeeping at one point and all that. But all these things are coming more and more integrated together. So I think being able to combine all these solutions together so that you can provide as much as possible in an interface that the customers are using to a big degree, that is where I think the future is going to go. And then we also see a trend towards a little bit of segmentation, because on the consumer side, you've always had the segmentation from the entry cards you get when you're a child up to the super affluent cards that you get when you're a very rich person. And on the business side, that has been quite the same card offering before, but we see more and more the segmentation also coming in, and the affluent segment also playing in on the business side of cards. And I think that is going to grow also as we move forward.
Do you see do you see that credit or debit will be the growing factor in the future?
So I think both, and I think they also get more and more integrated. So I think, and also looking from our side of the world, before it was really clear you had a credit card and you had a debit card, and that was what you paid with. But now with technology, it's so easy to integrate this. So even if you pay something with a debit card, you can actually transfer it to a credit facility. So I think that flexibility of using the funds where you have them available will be something that that it will help the companies to a big degree. And I think from Visa perspective, we have been working on various projects. We have one project that we call Flex Credentials, which basically means that with one card credential, you can actually steer the transaction towards a debit or a credit facility based on what type of merchants or what type of amounts you're shopping for. And I think those solutions will blur the lines between debit and credit even more. But I think access to funds will always be critical. So that is something that every small business will need to have.
Great. Thank you, Linus. Very insightful. Edouard, you're speaking to a lot of companies. What kind of industries do you see kind of in trend right now?
I think that there are several industries that are emerging a lot. So B2B travel obviously is there for quite some time, but there is still some push, I would say. Here, the cool thing is that the volumes are big. The number of transactions are important as well. So, there is a need about, scalability and be able to manage all those numbers and high volumes. So that's something that we see emerging and pushing a lot. Something that is pushing as well very significantly is ERP SaaS accounting solutions. I think we touch base here, like several topics that are very interesting, like you need to have a card payment, you need to have access to liquidity and funds, and you need to be able to reconcile that into a accounting perspective as well, to make sure that you have the possibility to drive your business and to have the possibility to be in full control of how your company is moving ahead. And there is a big push in this vertical as well, where basically you have this platform and ecosystems where you can embed, as we mentioned, white label credit solutions. You can embed as well card payment white label solution, but you can also embed IBANs solution. And so basically you have within those ecosystems like the full access to all the service that you need to control it from one single place. And I think that's something that the market is valuing a lot, and that we are pushing a lot. Also, what we see is PSP's marketplace. There is a lot of payout that are done through marketplace, through money transfer, but there is more and more a need, to add payout on cards. So that's something that we've been seeing on the market, and that's a trend as well that we see across all Europe. And I would say the last vertical that we see is related to fleet, and mobility as well, where basically you have some platforms that are able to manage truck fleet or car fleet. And if you are able, to link a car to that in order, to pay your fuel or your petrol, and that you can have everything under the same ecosystem, that's something as well that is working a lot. So there are a lot of others, I would say, experience and industry that we have, but that would be the main that we see so far emerging.
And we have around 5 minutes, so I suppose we could also look at the Q&A section. I see we have one question, so I will read it. I pay for extra cards from what I understand, but using API is free. Can you tell me about the pricing? I guess, Edouard, that's for you.
Well, I will do a commercial answer. So basically, what I can say is that it's mainly based about volumes. So the more volumes you have, the better conditions you will get. But what I can say is that the investments that you need to have and to put on the table to launch a card program is not as big as you can imagine, because we take care about all the regulatory aspect, PCI DSS, all those stuff that are very significantly expensive to maintain. This is done by company like Wallester, I would say. So our partners, there are obviously a lot of job is to integrate the APIs and things like that, but it's more like workload and time to spend to invest and to build a solution. But from a financial perspective, that's something that is much more affordable than in the past. And for the business model, most of the time, it's like you have a monthly fee that you have, and then you have the usage fees that are based on the number of cards or the number of transactions that you have, which is, I would say, like the reflection of the overall card payment industry, where it's based on transaction most of the time. So I don't know if it's answered the question but at least that's the answer we have for now.
It's a good hint. And one more question: how quickly can a company launch without cutting any corners?
I guess this one is for me as well. So I would say it depends. In average, I would say that you can launch a card program between a few weeks and a couple of months, but in average, you can do 3 to 4 months. That's something that is reachable. Again, it depends on the size of the company. If you have like a very big banks or companies, there is maybe a little bit more of time, to take the decisions, and maybe it's a little bit slower. But when we talk about fintechs or companies like GF Money, they are, very flexible, very quick to implement. And I think that, 3-4 months is something that you can achieve very
And
easily.
if you just look at the API solution as an example, that those could be done very quickly. It's more focus of compliance and different application processes that can maybe take the longer time, but actually the implementation into a technical platform, I think, is the fastest part. Of course, it depends on availability for your tech and so on. But
thanks for the input. One more viewer is running a payroll service in Poland with tech industry contractors. They're considering adding corporate clients for contractors, but many of them are from different countries. Is it a blocker? What kind of end users the company has?
So from a compliance perspective, I would say that so basically, companies like Wallester, we operate according to our license. So we have a pan-European license that we've been passporting across all Europe. So I would say that most of our clients and end users are European-based or UK-based, based on our passporting as well. So that's something we will be looking at. That there can be, some analysis and exemption that we can have based on the, reverse solicitation. But you'd say that 95% of the even a little bit more are from Europe. So that's something we'll be looking at for now.
Thank you. And one more question is, how long to get a dedicated own brand digital only design approved once submitted? So
You mean
someone is looking to launch virtual cards, I suppose. What is the approximate timeline for that?
Well, the cool thing is that when you launch a virtual card, you don't have, all the card manufacturing constraint that you need to build the card, to personalize it and to ship it as well. But I would say that, in all in all, from the moment you sign the first contract and you have the first card transactions done, it can be done like in a couple of weeks, 4 to 8 weeks, I would say. The quickest we did, I think it was 28 days, but we have like a very big push internally to do that. But I would say 8 to 12 weeks is something very much reasonable.
And I guess that was the last question we could cover. Thank you, everyone, for this insightful discussion. I will be posting just in a second where you can get in touch with us. So that if you are interested in launching your own project, don't be scared. Let's connect on our page, or you can reach out to our sales team via email. I have added some links in the chat so everyone could reach out. Thank you very much. Thank you,
at least we weren't afraid when we contacted Wallester, so don't be afraid.
Don't be afraid. Let's talk about your project.
Well, thank
Thank
you,
you.
everyone. Thank you, David. Thank you, Linus.
Thank you very much,
Appreciate it.
everybody.
Thank you,
Thank you,
everyone.
Angelina. Take
Have
care.
a
Thank
nice
you.
Bye-bye.
evening. Bye-bye.
Thank you.